Just under 6 years since its establishment in Uganda, the penetration of mobile money payment has grown so fast, with the number of registered mobile account holders standing at 17.6 million. Mobile money can now be used to pay for school fees, utility payments like water, electricity, taxes, salary, merchant payments, international remittances, insurance, and airtime purchase. The trend in mobile payment in terms of registered use has surpassed the number of people holding accounts in the financial institutions that are supervised by Bank of Uganda, which includes commercial banks, credit institutions, and microfinance depositing-taking institutions. Economists are now concerned that the platform could be used for money laundering given the lack of monitoring of cash flows. Bank of Uganda Governor Prof. Emmanuel Mutebile is concerned about the inability to control interest rates because of mobile money.
This is because central banks control short-term interest rates by varying, changing the liquidity available in the commercial banks to meet their reserve requirements. But if mobile money eventually leads to a diminution in the role which commercial banks play in the financial system, the interest rate transmission mechanism, which relies on movements in short-term interbank rates being transmitted along the yield curve to all other interest rates in the economy, will be weakened, which in turn will weaken the transmission mechanism of monetary policy.
The Bank of Uganda governor now says there might be need to revise Uganda's monetary policy, which is bound to be undermined by the growth of mobile money.
Such transformation in the way in which financial services are delivered matter profoundly for public policy, not least because traditional banks play a central role in the way in which monetary policy is implemented by central banks under the focus of financial regulation.
These velocity and money multiplier become relatively unpredictable. The question has been, is this the problem of mobile money? If it is mobile money, it automatically means that it renders our monetary policy framework obsolete. So we have to look for a new monetary policy framework.
The economists are worried that mobile money will further undermine Uganda's saving ability given its easy accessibility.
So it becomes higher consumption and therefore less savings. Now I have to look for an alternative job, obviously, to break even. So that is really where mobile money becomes a big question mark.
Mutebile warns that should mobile money overtake the traditional banking system, the economy will be greatly undermined.
Reasons. Commercial banks are much more important to the stability of the financial system and the delivery of essential financial services to the economy than any other type of financial institution.
Mobile money transfer services entered the Ugandan non-bank financial market in March 2009, and currently there are 6 providers including MTN, Airtel, Uganda Telecom, Orange, Mcash, and Easy Money. As at the end of June 2014, the combined total number of account holders in these 3 types of financial institutions supervised by the Bank of Uganda stood at 5,587,251 out of an estimated population of 35 million people. Anita Mwangazi, WBS News in Kampala.